Howdy everybody, this is Brian from quantlabs.net. Today is October 12th. So in this video I've got 3 video segments to show. Basically this is a new set of reports that I'm going to make available for my quant analytic members. We're just trying it out and just trying to see if there's any consistency to the theory of setting up a trading day or a period of time, presumably a trading session that will work in conjunction with the London Open and the New York Open for Forex trading. So basically you're looking at the membership section. I just posted this under one of my bonus videos, and what I'll be doing is I'll be making these reports available. And basically the 3 videos segments that I've created that follows this video is the analysis itself and how it seems to show consistency over 2 weeks of data. Now again, that's just still a little too premature, I think, but you know, if I wait a month or 2, we'll see if this theory still sticks. But the idea here is you want to, from what I'm seeing with the pros and being told by the pros, is you want to work with the more volatile currency pairs because of the wider price movements that you'll get. If you know how to forecast those properly and time them, you can do quite well if you're doing the equivalent of something like a scalping sort of strategy, just getting in and out of these positions. And what I'm finding is there is definitely consistency on the most volatile, and they are usually will last for a month or 2, and in this case there's just a week, but I've done this same analysis a few weeks ago and they are pretty consistent since then too. So I will make these charts and reports available, and again, I'm only make this available for my quant analytics membership. You can easily get that if you come under the product section, and you can join on a monthly basis for this. This is going to be one of the live trading strategies I'll be using, and then just join by joining the full service here. So with that in mind, you can always download this file, which is about 5 meg, and so let me just show you what it contains. So essentially, if I look up, I don't know, one of the trading pairs of, let's say, US Canadian dollar, I'll include a document and a PNG file, image file. So in this case, this has been downloaded the last couple hours, and what it will show you is a few things. Let me just load up the proper application. So here we can see the distribution between over the last day of the high to low and open to open bars, and the bars are measured on 1 minute data. So in there with the associated Word document, I've created a file that you can download here, and basically what it includes is some interesting data that you can use to forecast your own trading, but it's all, again, automated. So what we've got here is we've got our normalized distribution view on open to open and high to low with the 1 minute bar data. We have our median, mean, standard deviation, which is probably used quite a bit, the variance, skewness, min, max, the sum, and the count of the number of bars. So we have the high to low as well, and here's all the different stats. I like the positive and negative returns. You can definitely see that there's a more downward trend in this case for the US Canadian dollar. So those are the sort of things I look for in terms of momentum over the last day, positive and negative returns. And this is raw data, and then our standard deviation between 1, 2, and 3 for extreme moves. And again, those charts, this one's a more useful one, so you can get the ATR view, which is really the volatility using the ATR, average true range, to calculate the different snapshot of different periods of intraday, standard deviation, the 1 day, 4 hour, 1 hour, 15 minute, and the 5 minute. I could do the 1 minute, but I just think that after a certain level it gets kind of noisy and you'll get a lot of false positive types of trades. So this is what we include. And then the other thing that's included, which is pretty important, is this ranking file. And basically what that does, which you'll see in the next set of videos, is this exact same file and another statistical file to show you the difference between the snapshot of the week, the prior week, and the current period of all these different currency pairs. So if I load this up, basically what it does, it gives you the analysis on the what I call a short view, meaning intraday only. So these are all the different currency pairs. All this data is from IKEFeed, and this data is really from FXCM. So I think this can be translated into Dukas copy as well. Just due to the fact that with Dukas copy, I don't think we can do this type of analysis that I can with IKEFeed. And then again, we have the volatility measurements over these different periods. Again, 5 minute, 15 minute, 1 hour, 4 hour, 1 day, and standard deviation. I think the 4 hour move might be really good for New York Open to compare the prior set of 4 hours on the London Open as well. So there's some interesting discoveries here, and the discovery you'll find later in the video, but basically is the two most volatile currencies pairs are the ones you want to trade for the next period that you're going to analyze and open up on, and that's where you're going to make most of your profit if you know how to properly position those trades and know how to do it with a scalping basis. But I think I'm hoping to nail that over the next couple of days. Hope this helps you out later, and enjoy these 3 video segments later. Hey everybody, Brian here from quantlabs.net. In this video, I want to show a couple of views of most volatile, and this is from the same data set late last week. Today's the 12th of October, so roughly about a week ago. This has been corrected now with the volatility lengths. What I find interesting is the Rand and Japanese yen is still the most volatile, but we will start to see, this is a long-term view on the 6 month with the US dollar and the South African Rand, so that's still quite the volatile. And then US Mexico peso and the Canadian Japanese yen and the British and the Canadian dollar. Now when I go back and to sort this, now again, remember I'm using 1 minute data for up to the last 11 months, and that was captured as of about a week ago. So I just want to show you the differences. So now what we're going to do, so what I just showed you is sorted by the standard deviation. Next one I'm going to do is a long view of the 6 month. So we always keep it descending order, and you can see here that the you'll see more of this British pound as that's part of the I'm going to assume the negotiations between that and euro. You can see here US dollar, South African Rand, but the South African Rand and Japanese yen are definitely very volatile. US dollar, Rand, British pound, Japanese yen. And if I go in and sort by month, or sorry, by quarter, so no, we're doing weekly. So if I do by weekly, so you can see here, now it changes quite a bit on the short term, where the Rand and the Japanese yen still very volatile. British pound now against the Swiss franc, pound against the Australian dollar, and against the US dollar. And I think what could be driving this is all the news coming out of UK with its data and the interest rates and political stuff going on. So that might be part of that reason. So then if we go back and look at the weekly, so now we are going to sort by weekly. So I believe nothing much has changed. We'll do it again on the daily. So now I'm going to do column C, descending. So you can see here it's still the same. Rand, Japanese yen, pound, Swiss franc, so on and so forth. So over the last little while, these are the top two currencies that have been fairly volatile. So I'm going to do some more analysis on this on the portfolio that I ran just after this volatility, see what that will say, and I'm going to see what happens there. Now, as it stands, this current script that I'm running is what I call my long-term view, and then I'm also going to do the same thing, but I'm going to only download weekly data of these currency pairs as well as analyze it now on intraday, meaning daily, probably maybe 4 hour, half a day, hourly, and then 15 minute, maybe even 5 minutes, see what we can find. All right, so we'll get to that right now. Later. Welcome to our next video segment. Okay, so in the last video that I made with a long-term view, that data set was from October 6th, since that is roughly a week ago or 8 days ago, 6 days ago, sorry. So what I did was I created a new script or modified the old one to only look at the intraday data. So what it does is only looked at the last day. So it's quite interesting as a pattern, or it's totally different from what I've shown you before with the rand in there. So I just wanted to show you what's been happening. Okay. So when you look at the more volatile, let me show you the periods. You've got 5 minute, 15 minute, 1 hour, 4 hour, 1 day, and then the standard deviation for the last day's worth. Okay, and again, we're using the same data on by minute charts, so nothing's changed there. All we're doing is just changing the calculations on the period of that calculation. So this is what I found. And again, this is for October 7th. So let's first sort by the standard deviation, which is, I believe it's column H. Let me just see if that's the case or not. Okay, so, yeah, so we are looking at column H. Okay, so I'm going to do a descending again. So what you'll find here is a couple of interesting characteristics. So if I keep track of, let's say, just do it this way. We're going to do a volatility by standard deviation. And if I rank, let's say, the top 5, okay, actually, no, I'm going to create another spreadsheet here. Go. So we're going to calculate by standard deviation. Okay, so these are the orders for that. So our next one we are going to sort by is G, column G, that is. As you can see, 1 day. So let me descend by column column G, and that again, I believe is day. So here we are now taking our top 5. Okay, so this is our daily. So once again, you'll see a trend here, which is quite interesting. And then again, we are now going to do the 4-day, half a day. Okay, so we're going to sort by column F, ascending. So in our case, we will see, so it's a 4-hour. I can see here, these two periods stay the same. Okay. The next we are going to sort by hourly. Not doing a good job here. Okay, so we want hourly, which is column D, column E. Now, obviously, I can do this within pandas in an automated way, but what we're trying to do here is try to see what kind of relationships we can see between the different periods, if there is any. Here. So we are doing hourly, was it? 4 hours. So we're doing column E. So let's do that. Okay, so column E it is. Okay, so 1, 2, 3, 4, 5. Now it's changing a little bit. This is very, very, very interesting. I'm not doing a good job here, so let me just do that again. I think I messed up. Okay. So we are going to date sort by column E. We want it descending. Okay, there we go. That's what we were wanting. So that's column E. 2, 3, 4, 5, doesn't matter. Okay, so that's 1 hour. Okay, the next one we are doing is 15-minute. Data, that'd be column D. Sure it's descending. Okay, so we want, so it's pretty consistent here. So it's 15-minute, wasn't it? Okay, and it gets very interesting on the 5-minute level. Okay, so we go sort, descending, and that's column C we want. There we go, that's exactly what I wanted to show you. 2, 3, 4, 5. Okay, so we've got the 5-minute. I don't see the point in doing the minute because that would be just too noisy. Okay, so what we're looking at here is a standard deviation. The two are very strange there, and okay, so our most volatile is the dollar and the rand, US dollar and the Mexican peso. So you can see on the 4-hour, 1 hour, and 15-minute it's consistent, and then on the 5-minute it switches. But the interesting thing is when you look at the intraday level, the Mexican peso, US dollar, Mexican peso is got the most vol on the standard deviation level. And then when you look at the rand, it's fourth most volatile on the standard deviation. Okay, that's fine. So what I'm going to do, I'm going to do another data set and run this intraday short on today's data that I capture for October 12th. Let's see what we can find. All right, welcome to our next segment here, video segment. So this is all the data, volatility data for the periods on the short intraday view. As you can tell, we got the 5 minute, 15 minute, 1 hour, 4 hour, 1 day standard deviation for the last day. So as I did before, I did analysis, and I've pretty well summarized everything here for today by their periods and their volatility. So you can see here that there is somewhat a consistency with the volatility throughout the day, and there was some news about the British pound was getting pounded by Brexit talks, but I'm not sure if it's been related. But the rand and the Japanese yen seems to be the most volatile. Now, regarding the dollar and the Mexican peso, I think this is related around the NAFTA negotiations that keep coming up. With the New Zealand dollar is another matter. But you can see here, the mix is pretty well the same, at least for the top two. So it's a really interesting scenario that we got here. My theory thinks with the portfolio optimization, we should only really focus on the top two. Throughout the day, it may switch between the two. So maybe do an entire analysis for the day or session, maybe a 4-hour trading session before the start of London, and a separate one for the New York Opens. And then just only focus on the top two most volatile currencies to optimize your portfolio mix. So that's what I'm thinking of doing. But you can see here there's definitely some consistencies between this period, which is again last week, and just last hour for today. So I'm going to run a efficiency portfolio to see what I come up with, and see what my portfolio says, see if I can find any consistent patterns as well. But it looks like the top two are the best to work with, as I said, top most volatile for these periods.